Good morning, Monday, December 29th, 2025, and the last Clubhouse Insider of the year. Thank you to everyone who's been following along. I really hope that these have been helpful for you. Mortgage rates are always in the news, but they're very complicated, so they can be influenced by so many things. Staying in tuned will hopefully help you make informed decisions as you look for yourself or for clients. We are here to help and educate. So please help us by following our channel and our socials, all under Mortgage Mark DFW. And we will continue to add value for you over 2026 and beyond. So let's take a quick look. Markets are staying active as we close out the year. Mortgage rates have actually been positive recently, with rates coming down a bit here over the holiday weeks, hovering around recent lows. But we are seeing day-to-day volatility as traders react to things like inflation data, job numbers, and expectations for what the Fed may or may not do next, which would be in late January with their meeting. So conventional has come down, right? We're under that 6.25 on the average, which we're going to do a lot of talking about averages. I have talked about it, but very important to understand what that means. A lot of things go into averages, may not be the exact rate that is offered to you once you apply based on so many different factors. But what we love seeing here is just the indicators, watching it go up and down. So overall, FHA still in the 5s and creeping down lower and lower. VA, same thing. Conventional here. And then, of course, the January meeting is going to take place at the end of the month. So hopefully we're starting to see some consistency. You can see that here in the Treasury over the last month. There's always peaks and valleys every day, every week. So the market's always going to consistently change. But you see here that we're staying in the same range. We'd love to see this Treasury number come down and have a 3 on it. However, mortgage rates themselves, take a look at this. This is last year versus now. This has been, whether you like it or not, a good year for rates. We have made significant progress. Instead of being up, it's almost a whole percent that we've come down on average. So this has been great. We've seen big drops, and then we've seen them come back up and down like we talked about. But this year, since some of those Fed cuts have started, we've seen some consistency. There's still peaks and valleys, opportunities to buy dips, but overall, we're starting to see some level. Hopefully that will maintain. But we'll just have to wait and find out. Like I said, so many things can affect rates. But a quick reminder, Fed cuts don't automatically mean lower mortgage rates. Markets usually price those moves in before the announcements, and sometimes rates actually move higher after the headlines hit, which happened on the most recent one. But the most recent one was a little bit different, but it has happened that way pretty much every cut since last year, where it got higher afterwards. This is why timing matters. So if you're buying or you're looking to refinance anytime in 2026, or just tracking your equity, it's really important to stay informed instead of reacting to news after the fact. So if you can stay ahead of it, you're going to be in great shape. We have resources to help you do that. Please reach out to us. If you want help tracking your home value, reviewing any mortgage strategies, or just staying ahead of these shifts like we're talking about, please reach out at any time. And we'll keep breaking it down here so you don't have to chase those headlines. And we will see you next year on the Clubhouse Insider. Have a great week and Happy New Year to everybody.